Hi, I am Viral Shah.
More than a year has gone by since the first COVID wave hit our nation. Feels like a lot more, doesn't it? Just as we began to recover from the first wave and started opening up again, we were met with a sudden and even more powerful second wave, which sparked frenzy and fear in our hearts and minds. But for the second wave, we saw partial lockdown across various states. What was the outcome? It ensured the economy chugged along. And the stock market cheered the decision by rewarding the investors, with Nifty once again breaching the 15,000 index mark. The brutal sell-off during the first wave created new lockdown darlings in pharmaceuticals, diagnostics, specialty chemicals and financial services. I'm sure you have also noticed that the power, IT and telecom sectors have also been doing well. And now during the second wave, sectors such as metals and minings, commodities, PSU banks and mid-cap and small-cap stocks are in favor. The automobile, FMCG, agri-input, real estate and manufacturing sectors reopened. They received a much-needed impetus by the government's initiatives such as PLI schemes, Atmanirbhar Bharat and Make in India. And now, let us look at the laggards. The pandemic has been hard on sectors such as travel and tourism, media and entertainment, hospitality, aviation and railways, infrastructure, oil and gas and retail. They have unsurprisingly underperformed the benchmark indices. But as the vaccination drive catches a momentum across the country, there is an optimism amongst the investors that the lifting of the lockdown and travel would lead to a significant outperformance of the sector laggards. We at Sharekhan Education have researched the sectors and identified a few stocks that have the potential to regain lost ground after the lockdown is done. Here's the list: IRCTC, Indian Hotels, Lemon Tree, PVR, Interglobe Aviation, Titan, Page Industries and DMart. These are some of the stocks, amongst others, who may be major beneficiaries. These companies have managed to survive the downturn in the sector caused by COVID, continue to have strong moats along with fairly good financials. The management of these companies has shown resilience during these tough times and will be able to scale them back to normalcy once the COVID is over. To add to that, with reasonable certainty, we can say that the sectors such as IT will continue to do well. And lastly, the shift from China to India will continue to favor the sectors such as pharmaceuticals and specialty chemicals. We suggest you do your own research before making any investment decisions. Stay tuned for more. This is Viral Shah signing off.